Hello everyone, and welcome to this weekly Forex Outlook. I'm Marios Chatzikyriakos, investment analyst here at XM, and here with me is our chief economist, Michalis Flourendiadis. So Michali, we had a very interesting week. We had the Fed signal that it's done hiking, at least in 2019. We had a lot of ups and downs in the Brexit process, and we also saw some very disappointing data out of the Eurozone. Can you please guide us through that?
Yes, it was an interesting week in the sense that we had bad news regarding the world's major currencies, particularly the dollar and the euro. First of all, as you said, the Fed was more dovish, I think, than the markets expected because it took plans of a rate hike for 2019 off the table. It also reduced its tapering rate and is going to stop tapering altogether after September. So this was more dovish than the market had expected because they might have been expecting that the Fed would keep this prospect open. So this hit the dollar pretty hard, but the dollar made a comeback without any major catalyst, maybe as a lot of traders and investors realized that there were so few alternatives to the greenback for now. And this view was justified both by developments regarding the euro. We had a very, very disappointing Eurozone PMIs, particularly the German manufacturing PMI, which fell well below the expansion-contraction line. And we also had more turmoil with respect to the Brexit process. I think the risk of an accident, let's say, leading to a no-deal Brexit has increased now because the EU has made its own stance, putting some conditions and not giving away everything that the UK was expecting. For example, the EU is requesting for the UK to hold European Parliament elections, something that would be a pretty serious setback for the country that is heading towards Brexit to hold European elections. So this made sterling the worst performer of the week because I think maybe the optimism was a little bit overdone previously in the sense that it would be more or less that no deal was off the table and that there wouldn't be as much brinkmanship as we saw. So having said that, the Japanese yen, the best performer, even though we didn't have a lot of risk aversion, I think there were not so many bad news regarding the yen, so it was pretty stable and managed to become the best performer relatively easily. So having said all this, Maria, why don't you tell us what we should be expecting next week? What are the key points that and how could they affect? And perhaps I neglected to talk a little bit about trade negotiations. This is optimism and pessimism is waning back and forth, let's say, for this, but now there is a little bit more optimism that maybe US and China are going to agree, maybe China is going to agree to more imports of US goods and that it could maybe reach a settlement. At the same time, maybe some dark clouds gathering between the US and EU trade relationship, so maybe that could hear more about that next week. So what should we be on the lookout for?
So it's a relatively, let's say, calm week. We only have one central bank meeting on the agenda. The Reserve Bank of New Zealand will be meeting late on Tuesday. Now, they were neutral the last time they met, and I don't believe they're going to substantially deviate from that. But on the margin, maybe there could be a slightly more cautious take in the statement accompanying the decision. We had some GDP data out of New Zealand lately, and they were in line with market expectations, but they were short of the RBNZ's own forecast, so there might be some cause for caution there, but I wouldn't expect any drastic shifts, let's say. Now, on the data front, it's a relatively busy week. We get final GDP out of the US for Q4. I don't believe that's going to be a major data point because the first quarter is now almost over, and we already saw the Fed pivoting towards no hikes, as you just described. So investors could focus mainly on personal income and spending data out of the US that will also be hitting the markets. There's also a lot of data out of Japan, so Tokyo CPIs and employment data. And last but definitely not least, we'll get Germany's IFO survey, business survey for March. Like you said, we saw the manufacturing print disappoint out of the country quite significantly earlier, so maybe investors will also look at that survey for another take or to confirm perhaps that the weakness that we saw in the PMIs. And finally, in the UK, it's always there's always some interest that we could have another Brexit vote next week. So the EU basically gave Theresa May another 2 weeks after March 29th. It's not certain yet that there will be such a vote, but there's a good to fair chance that UK lawmakers may vote on Theresa May's deal again. It's probably going to get rejected since nothing has changed basically from the last time, but surprises are always likely in British politics.
So I think it's very interesting that both maybe the Prime Minister and the EU are maybe bluffing the UK Parliament with a no-deal card. So we don't know whether that is a bluff or not. And I think that makes the situation a bit more risky now since they are both playing this card. And I would also add that the IFO survey is a favorite of many investors and traders, many market watchers. So I think indeed that it will give us a more complete picture of the slowdown that is taking place in Germany and perhaps the repercussions for the ECB and the euro. Thank you very much, Marios, for your comments. Thank you everyone for watching and have a great day.